And local trade remains under pressure this morning. This is due to the U.S. Federal Reserve warning that interest rates might need to be hiked even faster and higher than expected in an attempt to rein in inflation. Let's speak now to Makwe Masilela, Chief Investment Officer at Makwe Fund Managers, about how the JSE is shaping up on the back of these warnings. Mr. Masilela, good morning to you. Your quick overview of how the markets are faring this morning. It has been a seesaw in local trade, so to speak. What's the JSE and the Rand looking like this morning?
We are not looking okay. Remember yesterday we closed down over 1%, so today we opened flat. And at the back of what you just said in your intro, those comments that definitely interest rates must continue to go up. And I think equity markets should stop what they're doing, that is betting against the Fed, because now you don't want to go against or fight the Fed. And I think the bond markets, they've got it right, because they're the ones who are continuing to expect that we will definitely have higher interest rates, and that could easily lead to some recession. So I think as equity players, we should also start buying into that particular story. The JSE opened flat today.
Yeah, well, here is an even more worrying situation. S&P Global Ratings, that's the ratings agency, downgrading its outlook on South Africa to stable, moving from the positive. What are the elements that have been flagged by this ratings agency?
Number one, we've seen that the rand didn't react much to all that. I think it was expected. The rand continues to be just over 1850, all because of what is happening with the US dollar, which continues to be strong, and the dollar getting strong because we know that the US Fed will probably increase interest rates by 50 basis points come the 22nd of March, and that will make the interest rate differential continue to widen. Hence, we see people getting more into the dollars, and the rand continue to weaken just like other emerging market currencies. But S&P, their problem here is, guys, we've got a problem when it comes to infrastructure, and this whole thing of load shedding is making a situation worse, as we have also seen that your fourth quarter economic numbers were not even that great, and worst of all, the reforms when it comes to state-owned enterprises, they seem to be very slow. So basically, they've mentioned all the things that we've been knowing about them for the past 2-3 years, and we have not been doing anything about that. And yes, if you are moving from positive to stable, chances are you might easily be downgraded.
Let's talk company news. Capitec saying it expects group headline earnings per share to be a rise of between 13 and 16%. What should we read into these numbers?
It was expected, as we've seen with the other players who are first trying to a net bank of this world, that the guys continue to make good money. Number one, benefiting from high interest rates because that helps them to increase their net interest income. And also the guys continue to increase their loan advances. As we know that SA consumers have been struggling. As a result, we need some extra money to be able to cope. And that is also indicated when it comes to our private sector. Credit extension would continue to grow regardless of interest rates going up. So yes, the problem will be if interest rates get to be increased more than where they are now, or rapidly so, because all that interest income that they've been managing to benefit from will end up being bad debts, and that will be bad for them.
Let's talk about Northern Platinum also posting a trading statement. Do the numbers match this week's GDP announcement in that sector?
Yeah, they're doing even much better. Remember, these are the guys who have been helping your economy. These are the guys who have been helping your tax coffers. The guys expect, or they've seen the revenue going up by 45%. That itself led to operating profit to increase by 55%. And what led that 45% increase is all because of good sales volumes and also the good rent basket price when it comes to their commodities. And production increasing by almost 11.9%, even though they're still worried about mining inflation and also the likes of load shedding, and hence they expect their profits, their headline earnings per share, to increase by almost 72%. But their fight with Impala Platinum is affecting Royal Bafokeng Platinum, because these guys have been fighting for control when it comes to Royal Bafokeng Platinum.
Let's conclude with Meta Investments. In its trading update, it says, or it's flagging decreases in earnings per share and headline earnings per share. Talk us through that update.
And here you are talking a decrease of around 105%. Remember, these guys are involved in the manufacturing, distribution, and retailing of your storage facilities and also automotive parts. And we have seen that the guys had to have this non-cash impact of applying the hyperinflation accounting when it comes to your Turkish operation. We know how high inflation it is in Turkey, and also one of their major customers, which is Toyota SA, was affected by the floods in KZN, and also because of supply chain disruptions. Unfortunately, they had to resort to premium air freight that was kind of expensive, and going forward, the guys had to also have this pre-planned production and engineering cash costs because they were preparing for the new Ford Ranger, which was launched in November.
Makwe Masilela, thank you very much for that market update.